When it comes to the bottom line, total return on investment is where it is at. It is nice to have passive income, but a lot of times you are sacrificing growth in the process. For today's pick, I was looking for some huge total returns and also had at least a sprinkle of passive income. It came as no surprise that every single one of these stocks are from the same sector. This sector is absolutely booming, and we will look at those energy sector titans of return right now. Energy has been absolutely on fire for the last year and is expected to stay that way for the remainder of this year and perhaps even well into 2023. These stocks today have benefited big time from this boom, and when investing in a boom, you always need to be prepared because a sector does not boom forever, and the end of the energy boom could be a little problematic for some of these picks. These are not your blue chip energy stocks, but they do have the potential to post some crazy returns. The only rules for my selection were that these stocks needed a dividend, they also needed to be Canadian, and I was also looking for some positive fundamentals. Though honestly, in this environment, the fundamentals for most of this sector look better than they actually are. Without any further ado, let's jump in with the titans. Kicking off our list, we start with Pason Systems Inc. with a ticker of PSI. They are an oil field specialist with software and hardware solutions to manage drilling data. Their electronic drilling recorder is the company's primary product. They have a market cap of $1.2 billion. Their earnings per share is 0.59, and they have a price to earnings ratio of 26.40. When we look at their return, their dividend yield is 2.051%, which is paid out quarterly in the amount of 8 cents per share. Their growth over the last year saw their share price rise from $8.75 to $15.60 for a return on investment of 78.29%. And adding in their dividend, we get a total return of 80.29%. I really do like their market cap, and I think this company is not looking too bad overall. It may be exciting that our smallest return on our list was 80%. Holy banana bread, what are we in for today? Our next stock is Alvopetro Energy Ltd, and they have a ticker of ALV. They are a Canadian resource company, though they produce their natural gas and hydrocarbons in Brazil. They have a market cap of $186 million, their earnings per share is 0.21, and they have a price to earnings ratio of 25.90. When we look at their return, their dividend yield is 7.349%, which is paid out quarterly in the amount of 8 cents USD per share. Their growth over last year saw their share price rise from $2.82 to $5.50 for a return on investment of 95.03%. And of course, adding in their dividend, we get a total return of 102.38%. With this company, we do see a smaller market cap, and to me that means watch them closer, as they will more than likely react negatively to the end of the boom. Also keep in mind they have a USD dividend, so there are conversion fees with that one. And that takes us to Enerplus Corporation, who has a ticker of ERF. They develop crude oil and natural gas in both Canada and the United States. They have a market cap of $3.8 billion. Their earnings per share is 1.28, and they have a PE ratio of 12.60. When we look at their return, their dividend yield is a little lower at 1.366%, which is paid out quarterly in the amount of 5.5 cents per share. Their growth over last year saw their share price rise from $7.64 to $16.10 for a return on investment of 110.73%. Whew! And adding in their dividend, we get a total return of 112.10%. This company is structured well, and I think they may be a company that does okay even once the boom has passed. I will definitely be keeping my eyes on them. For our number 7 pick, we have Gear Energy Ltd with a ticker of GXE. They are all about acquiring, developing, and holding interest in petroleum and natural gas properties, as well as the assets. They have a market cap of $372 million. Their earnings per share is 0.32, and they have a PE ratio of 4.50. When we look at their return, their dividend yield is 2.797%, which is paid out quarterly in the amount of 1 cent cent per share. Their growth over the last year saw their share price rise from 0.67 cents to $1.43 for a return of investment of 113.43%. And when we add in their dividend, we get a total return of 116.23%. Yes, that's a good-looking return, but this one I would be super cautious with, as they are technically a penny stock. And when the boom ends, this one will probably be one of those ones that will fall hard. Up next, we have Pason Exploration and Development Corp with a ticker of PEY. They are a Canadian energy company that develops and produces natural gas from Alberta's Deep Basin. A good amount of their revenue is from the sales of their liquid product. They have a market cap of $2.3 billion. Their earnings per share is 0.92, and they have a price to earnings ratio of 15.10. When we look at their return, their dividend yield is 4.31%, which is paid out monthly in the amount of 5 cents per share. Their growth over the last year saw their share price rise from $6.03 to $13.92 for a return on investment of 130.85%. And adding in their dividend, we get a total return of 135.16%. This is fantastic, and I really love the fact they have a good-looking market cap, and this is definitely one of the ones on this list that I have a lot of confidence in. At the halfway mark, we have Tourmaline Oil Company with a ticker of TOU. They are a Canadian energy company engaged in natural gas and crude oil acquisition, exploration, development, and production, all within the Western Canada Sedimentary Basin. They have a market cap of $23 billion, their earnings per share is 6.44, and they have a price to earnings ratio of 10.70. When we look at their return, their dividend yield is 1.162%, which is paid out quarterly in the amount of 20 cents per share. Their growth over the last year saw their share price rise from $29.20 to $68.83 for a return of investment of 135.72%. And adding in their dividend, we get a total return of 136.88%. This is a fantastic company and maybe one of the most solid investments on this list. Up next, we have Paramount Resources Ltd, and their ticker is POU. They are yet again another Canadian energy company, and they develop, produce, and market their natural gas and petroleum products. They have a market cap of $4.6 billion, their earnings per share is 2.51, and they have a price to earnings ratio of 13. When we look at their return, their dividend yield is 2.936%, which is paid out monthly in the amount of 10 cents per share. Their growth over the last year saw their share price rise from $13.25 to $32.70 for a return of investment of 146.79%. And adding in their dividend, we get a total return of 149.72%. Whew. Once again, we have a pretty nice looking company, and it is hard to argue with that return. As we close in on the top, we have Vermilion Energy Inc. with a ticker of VET. They are an international oil and gas producing company with projects in North America, Europe, and Australia. Most of their revenue comes from the sale of their natural gas and petroleum. They have a market cap of $4.1 billion, their earnings per share is 7.16, and they have a PE ratio of 3.40. When we look at their return, their dividend yield is 2.915%, which is paid out monthly in the amount of 6 cents per share. Their growth over the last year saw their share price rise from $9.55 to $24.70 for a return of investment of 158.64%. And adding in their dividend, we get a total return of 161.55%. Wow, definitely another solid company with a great year behind them and hopefully another great year ahead. The runner-up for top spot goes to Cenovus Energy Inc. with a ticker of CVE. They are an integrated oil company with oil sands assets as well as conventional crude and natural gas. They have a market cap of $51.5 billion. Their earnings per share is 0.98, and they have a PE ratio of 26.50. When we look at their return, their dividend yield is low at 0.538%, and that's paid out quarterly in the amount of 10.5 cents per share. Their growth over the last year saw their share price rise from $9.76 to $26.01 for a return on investment of 166.50%. And when we add in that dividend, we get a total return of 167.04%. Once again, they have solid fundamentals, and this has been an amazing growth journey for them. This one may be a disappointment to the passive income chasers, but still not an easy investment to ignore. Coming in at our top spot is Birchcliff Energy with a ticker of BIR. They are an intermediate oil and gas company that finds, develops, and produces natural gas, light oil, and natural gas liquids within the Peace River Arch area of Alberta. They have a market cap of $2.7 billion. Their earnings per share is 1.16, and they have a price to earnings ratio of 8.6. When we look at their return, their dividend yield it's low at 0.799%, which is paid out quarterly in the amount of 2 cents per share. Their growth over the last year saw their share price rise from $3.39 to $10.01 for a return of investment of 195.28%. And when we add in their dividend, we get a total return of 196.08%. This is a holy banana bread level of return. These stocks we looked at today are all going to more than likely perform well as long as we are in this boom. And a few of them are definitely investments I can see as longer term plays. However, always keep in mind that just because a stock went up massively in the last year, there is no guarantee that it will repeat that this year. With stocks like these, it really is best to keep watch over them, and is never a bad idea to take profits, as a boom can end on a dime. Also, keep in mind that this video is only the beginning of your research, and a financial advisor is the end. If you guys loved this video, be excited. There is way more to come. Until then, why not watch one of these videos? And before you jump into that content, just be sure to like and subscribe to support the channel. I'll see you in the next video.